Hello, everybody, and welcome to the 47th edition of LM's Weekly Wrap, our weekly program to cover the developments in the markets. We've been at the end of the earnings season. It's been a very busy earnings season, and a lot of data has come after that also. So we'll come to that a little later. But first of all, we start off with the global markets. I think there was a sigh of relief in the global markets because the US debt ceiling has been extended on expected lines. So markets can breathe easy at the moment. And as far as the domestic markets are concerned, we had a very strong cues as far as the Q4 GDP data is concerned. There has been a spurt in the services sector, a good rural picture, and overall quite a few positive things emanating out of this. We had a good GST collection figure, and we had reasonably decent auto sales numbers, and after a long time a good performance from two-wheeler makers also. So I think overall Indian economy seems to be in a very sweet spot, and we are seeing a reflection of that in the markets. We are seeing markets continue to perform very well, and I think rest of the global and the domestic developments, I think Jash will be throwing light, which will be followed by the sectoral outlook from my side. So Jash, welcome to the show, and kindly take us ahead.
Thank you, sir. As usual, we'll be starting with the Nifty levels. Today we saw a strong bounce back from the support level. In the last 2 days, we see Nifty, taking support at about 500, 18,500, 18,490, 500, and we see they've taken a good bounce back. The side markets have taken a lot of traction, and we are seeing the laggards starting to move up. The stocks that have not been moving up in the last about 1 to 2 weeks. All in all, I think the traders and investors are very happy. And as Sir rightly mentioned, that India is in a sweet spot. We have been mentioning this on our market wraps every week after week, that India is best placed right now due to different reasons. That is the chances of recession in India is 0%, where Germany entered recession. That's what I mentioned last week. So taking that forward, Nirav sir will give more outlook on the sectoral side. But on the global front, the US markets, after a month-long discussion, on May 30th, finally both the parties arrived at a conclusion. The issue of debt ceiling was done with 63 votes. They needed at least 60 votes to pass it through. And they have actually avoided a very big catastrophe of $31.4 trillion default happening. So that is how the markets cheered. The US market was about 0.5 to 1% up in the last 1-2 days. And so even the India markets have cheered the same. Coming to the crude prices, crude levels are at $74 a barrel. A very sweet space for the Indian market, Indian economy. Also, that's what we have heard. There are a lot of rumors going on that this week the petrol, diesel and gas prices are going to go down. So we might see a small, maybe a small uptick because of that in the coming week as well. But it's just a rumor, so we don't know how true it is. Coming to the most essential and crucial part for the country at this moment is the monsoons. We are expecting monsoon to enter Kerala on this weekend, that is the 3rd and 4th June, and the pre-monsoon rains to hit Maharashtra and Mumbai on the next weekend, that is 7th, 8th and 9th June. So this will take the course of market in the next few months, because normal monsoon is cheered as your crops, sowing, agricultural and rural sentiment uplifts. If your crops are good, already the economic cycle starts going around. So we need to be watchful of that. All eyes are on Kerala in this week, that is the Saturday and Sunday. So, but as IMD has very rightly said, that we expect a normal monsoon, which they changed from below normal to normal in the last week. So we are expecting about 97 to 102% monsoon this year. But of course, the El Nino effect is also there, but they are saying that that might not affect the monsoon this year. For further insight on the sectoral knowledge, I'd like to hand over to Nirav, sir.
Thank you. So, as pointed out by Jash, the domestic as well as the international scenarios are posing a favorable stance for the Indian markets. One important factor which has emerged from yesterday's data, which has come with respect to the Q4 GDP, is that rural economy is showing signs of bouncing back. It is showing signs of recovery. We are seeing green shoots of recovery in the rural economy. That is one. The second factor is that what the auto data which we saw, the two-wheeler sales. I think the two-wheeler sales have jumped back, and Hero Motocorp is a very accurate reflection of sales in the of two-wheelers in the rural economy. So that figure has also been quite impressive. So I think this is signaling that. To some extent, the rural markets are making a comeback. We have seen a very strong harvest season also, and going forward, the rain gods should hopefully oblige us. So that will also be an important factor to look forward to. Another important observation is that in most of the industries we are seeing the capacity utilization hit 75%. Now 75% capacity utilization is a very critical figure, because typically most of the companies start thinking about expansion once capacity expansion hits 70%. When it actually touches 80%, that is the time companies take a decision whether to go in for a greenfield expansion or for a brownfield expansion. So I think this is also a very healthy sign. A healthy capacity utilization means that the animal spirits are going to be unleashed in the economy, and most of the corporates, private sector will go on a capex overdrive. So this is again a very healthy news as far as the economy is concerned, and we've seen some very good growth happening in the services sector, especially hotels, transportation, logistics, etc. To just give you an example, the data cites that in the hotel industry there were 40 million people which are employed directly or indirectly with the hospitality industry before the pandemic. Now this figure dropped to 29 million during the pandemic, and now it has recovered dramatically to stand at 45 million, and is expected to go forward because of the huge demand which we are seeing in the hotel space. So all these are hardcore figures which are telling us what is happening in the economy and what is expected going forward. So I think we are seeing a few sectors which continue to perform exceptionally well. Some of the themes which we like as far as the economy is concerned: one is hotels, the second is textiles, the third is railways. All these are looking very exciting themes. Just to start off with textiles, we have seen a dramatic recovery in all the textile stocks. Last year we have seen that there was a double whammy as far as the textile sector was concerned. The domestic demand was kind of subdued. We've seen that exports were under tremendous pressure. There was uncertainty with respect to the exports, and there was a huge volatility in the raw material prices. For example, the prices of cotton had hit 1 lakh rupees per candy. Now the prices of cotton have started stabilizing close to 60 to 63,000 per candy, and demand is also making a comeback. So we've seen all the stocks beginning to rally as far as the textile space is concerned. We've seen good momentum in stocks like Arvind Limited or Gokaldas Exports or KPR Mills. I think all these stocks have done well, and stocks with overseas exposure definitely are going to do well. We've seen yesterday good performance in Himmat Singh Ka Seed also. So textile seems to be in a sweet spot. Plus most of the global brands, they are looking for a China plus one strategy. They no longer want to rely just on China, Vietnam and Bangladesh, and want to diversify their supplier base. So I think India becomes a natural alternative. It becomes a natural choice in this particular situation. So I think textile is at an inflection point. Plus the upcoming Indo-UK free trade agreement could work very beneficially as far as the textile sector is concerned. So I think all these factors work in the favor of textiles. So textile stocks definitely need to be given a close look. The next sector is hotels. We've seen a very positive commentary from the hotel sector. We've seen Indian hotels say that 33% EBITDA margin looks easily sustainable over the next few years. We've seen Lemon Tree hotels come and say that they are aiming at achieving 50% EBITDA margin. So this is again a very efficient sign of operations. And I think overall commentary from the hotel sector is very positive. We are seeing that the demand has outpaced supply, and it is likely to remain so till the next 5 years. So I think we are seeing a huge visibility till 2028 for the hotel sector. So I think all this is definitely shows that companies like Indian Hotels or Taj, GVK, EIH, East India Hotels, Chalet Hotels are all in a very strong spot. Of course, other hotels like Lemon Tree hotels are also looking quite good. So this sector also is likely to perform very well. The third is railways. As we have already pointed out, that government has given order just for 90,000 wagons till now, whereas the plan of the government is that there are 3 lakh wagons within the country, and all these wagons will be replaced, and the government wants to order a replacement of all these 3 lakh wagons. Out of this, order has been placed only for 90,000 wagons. It is the government's estimate that by 2031, 5.5 lakh wagons will be required, and till 2051, approximately 10 lakh wagons will be required, whereas the capacity to manufacture wagons is only around 30,000 wagons at the moment per annum. So this is the kind of opportunity which we are looking at, and this is just one sector. This is for wagons. If we look at electric locomotives, we have seen that Siemens has got an order for 26,000 crores for the supply of roughly around 1200 electric locomotives. In addition to this, we've seen a company, RVNL, Rail Vikas Nigam Limited, along with its Russian partner, has got an order for 120 Vande Bharat set at valued at 120 crore per set, with 105 crore maintenance contract for 35 years for each of these trains. The second order has gone to BHEL along with its partner Titagar Wagons. So I think railways, there is a huge government spending, and if execution falls in place, already we have seen comments coming from IRCON, Indian Railway Construction. They have said that there is huge execution pressure from the government prior to the elections. The government is clearly in a very aggressive mode. They want to achieve the modernization, the dream of achieving modernization of railways, and working towards that. So I think these are some of the sectors which can do exceptionally well. Some of our weekender stocks have had direct exposure to all this. We've today itself, I think we've seen some very good momentum in Titagar Wagons Limited. RVNL continues to do well. IRCON, Ramkrishna Forge, all these continue to do very well. And in the hotel space also, I think Indian Hotels continues to do very well. Today, Graphite India Limited, which is a weekender stock, has also done quite well in trade. Wonderla Holidays, which was recommended at 422 levels, today closing at nearly 522 levels, so it's already appreciated quite well. Weekender stocks continue to do well, so you could have an exposure over there. You can follow these stocks, and I think many other things to discuss, but time paucity, time constraints do not permit us beyond this. So please do write to us with your feedback on our program, and I think now I'll hand over to Jash for the concluding remarks. Yeah.
Thank you, sir. If you like our video, please like, share and subscribe, and download our app for more insights on research. Thank you.
Thank you very much.